Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And happy Valentine's Day, guys.
Happy Valentine's Day.
You know it's a marketing gimmick, right?
It is?
It has no real value as such. You can say that. You can say that when you want to buy, when someone asks you for a gift.
Oh, is it? No, I've already put out that Insta wish, and also my wife will be quite happy by now. Send her a few lines of a song this morning, and it's I'm on my way.
You've done your bit.
And financially intact also.
And what about you?
Prashant is a romantic guy.
I have to get on it now that Nigel has put the pressure.
But if I remember correctly, when I joined CNBC TV18 many years ago, there used to be these flowers that used to come for Sonia. So we'll have to watch out for that today as well. On the anniversary, it comes from the husband. But otherwise, those fans used to send a little teddy bear with some flowers. I recall this.
Back in the day.
Back in the day, the old office.
Okay, but you can use that excuse, So if,
I hope no one is watching, right? From my home. Otherwise,
it's a marketing gimmick, Prashant. No need to waste money on that.
All right. Well, let's kick this off with a quick check on things in terms of how the setup is this morning. So, we got a better kind of setup overall. You got US markets, which were looking in much better shape. So, essentially, the Nasdaq ended about 1.5% higher. The S&P was up about 1.25%. But the problem is that this was not backed by volumes at all. And I think that is something which people have taken note of. So risk on, but participation off. That's, I think, the best way to kind of put this. It was a low volume climb. Now, there was an article from, Wall Street Journal reporter who also goes by the name of the Fed Whisperer because, he's believed to have inroads into what the Fed's thinking, etc. is. There was an article that, he published which basically highlighted something interesting. So far, all of us have been talking about a hard landing or a soft landing. This article says that perhaps, there is no landing. You actually may see an economic growth upturn. It's possible. There's a third scenario which is possible. And I think people paid attention. He's a widely followed, reporter because of what I mentioned. And I think that at the margin may have helped. But I think what also was a factor in play, and perhaps a bigger factor in play, is that there is CPI, consumer price inflation numbers later today. And, yesterday's market conditions, overnight market conditions may be a reflection of that. Risk reduction. You basically want lighten positions, and this is a big one because of all of the stuff we've been discussing. There is seasonality. There is a little bit of, data issues with this particular CPI number. So it's really anyone's guess what this number will show. Consensus is still at about 0.4, 0.5% growth month on month. But I think this will set the tone for global markets, really. But there is inflation issues here in India as well, right? We got the CPI data for January after market close yesterday. That's the India CPI number, which also was very, very strong. And it came in at about, 6.5%. Consensus expectations were, I think, about 6%. And this was sort of higher than the prior month numbers, etc. as well. What this does is this puts the CPI, far uncomfortably above the RBI's target band, which basically means that one should come to expect more hawkishness from the Reserve Bank of India. Perhaps one more 25 basis point hike in the month of April, when we get the next MPC policy meeting. But this is something which market participants will also watch closely. There is no easing of the inflation issue here in India as well, and of course the policy response. Coming to the market, the Nifty and the Bank Nifty, just 2 or 3 levels really. For the Nifty, it was a poor session yesterday. We ended about 85 points lower. The broader markets were far worse off, 2:1 advanced decline, etc. The lower end of the rising channel for the Nifty stands at about 17,700, which kind of becomes the very near-term support. Let's take it one by one. We'll put more levels out as the day goes by. On the way up, the 20-day moving average at 17,862, which is the next immediate resistance. And above that, you've got 17,960, which comes as a bit of a resistance. For the banks, the Bank Nifty actually sold off 0.75%. It was worse off as compared to the Nifty yesterday. The 20-day there comes in at 41,587. There are enough and more supports for the Bank Nifty, which we've been highlighting. So I won't repeat them here. But just a couple of sort of levels to watch out for. The global setup is positive as we start, and SGX and the market opening may reflect that. But the thing is, we've got a very important data point later out of the US, the CPI number, which I think should keep people on the tenterhooks, not just here, but globally as well. Once that is out of the way, I think it gives us a bit of a clean stretch, one way or the other, in terms of a breakout or breakdown from this range we've been in from the 1st of February, the budget day. Guys, hi.
Absolutely. Hi Prashant, hi Nigel. I guess after yesterday's market, you get a bit of a cautious feeling, right? With the way the market breadth deteriorated yesterday, the Nifty closed below that 17,800 mark, and there were fresh shorts in the F&O market as well. Give and take everything this morning, looks like it's going to be a muted start. The SGX Nifty is indicating a muted start. The good part is that the handover from the US was quite strong. So the Dow was up about over 370 odd points. Good moves in the NASDAQ as well. And in terms of flows for our own markets, it was a second straight day of buying from the FIIs. Of course, that includes that huge 2,400 crore block deal from Coforge. So that, X of that, it's actually a sell figure. Now, the macro data in our own markets is weak, and I think that would be taken on board. It's pretty much a shocker that came in on the inflation front, and that doesn't bode too well in terms of what the next RBI policy would throw up. The expectation is that there would be another 25 basis points rate hike. Now, the inflation that came in at 6.5% yesterday, retail inflation, has exceeded the RBI's upper tolerance band of 6%. So that as well on the sidelines is not a good data point to look at. The Nifty is now facing resistance, of course, at that 100-day moving average of 17,940. So do keep an eye out on that. But after yesterday's really weak move, where there were a lot of internals on the downside, one gets a feeling that perhaps it will be hard for the Nifty to break above this 100-day moving average. A lot of earnings today, 5 big Nifty companies, Zaisha Motors, Apollo Hospitals, ONGC coming out with earnings. So we'll be tracking that Grasim as well. But Nigel, what are you watching?
Well, yesterday was a weak session, Sonia, as you all have been mentioning. The Nifty and the Nifty Bank, they ended lower, but the good point for me is they defended crucial levels. The Nifty defended at 17,700, the Nifty Bank defended at 41,200 odd. So that for me was the positive that came out of yesterday. The Nifty IT index, well, for the last 2 sessions, it's down close to 2.3% odd, while the Nifty and the Nifty Bank are more or less flattish. Since the NASDAQ has given a bit of a bounce, let's see whether or not the Nifty IT index can come to the party and in fact do a relative outperformance for today's session at least. The bulls, well, they'll hope for a decent close. You don't want to see a big downtick today. We're starting off in the green, but you'll want to end more or less flattish or in the green at least. And then, in fact, hope that there's a CPI surprise coming in from the US later this evening. Now, yesterday we ended lower, and it appeared that there was shorting both on the Nifty as well as the Nifty Bank because the open interest was higher. But that wasn't the case from the FIs because yesterday their short positioning was more or less flattish at around 82% odd. The problem is they're writing calls aggressively. So that 100 DMA that Sonia just spoke about, 17,950 odd, that's going to be a bit of a resistance zone. And they wrote calls aggressively yesterday, as the data point suggests, coming up for you on the screen. Now, the PCR has come down to around 0.8. We've seen in the past when the PCR comes down to around 0.7, and when you have a net short index from the FIs, well, that could be a perfect combination if you're bracing for a short covering bounce. So let's see whether or not that plays out. For the time being, though, yesterday, the 18,000 call, there was some out-of-the-money call buying out there, while the 17,800, 17,900 calls, they were getting written very, very aggressively. Which brings us to the crucial levels. Since both those two calls were getting written aggressively, and you have the 20 and the 100 DMA in that vicinity of around 17,900, that's a crucial resistance zone. However, on the downside, 17,700, we bounced off that. So you're hoping that we bounce off there in case we go to those levels. Crucial support zone out there. And for the Nifty Bank, yesterday as well, we went sub that 41,200 odd. So the 41,000, 41,200, crucial support zone, while on the upside, the 20 and the 100 DMA comes in the vicinity of around 41,600. Lastly, the SGX Nifty earlier today, when we just came to studio, it was suggesting a big gap up of around 40, 50 points odd. You like a flattish start because when the Nifty opens gap up, it gives perfect opportunity for the bears to short. So not such a bad opening, I would say.
Okay, not such a bad opening. Let's see how things go for now. That 100 DMA, 17,940 is something that's proving to be a bit of a hurdle for the market. But lots happening. So in the first half hour of the show, here's what you'll get to see. We'll get you updates from the market across the globe. We have Rajat Bhattacharya of Standard Chartered who will be joining us to discuss the global trade setup. Later, our research team will bring you the CNBC-TV18 list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Dipan Mehta of Elixir Equities. All right, first up on the equities front, then let's get a view in. Venugopal Gare of Bernstein says that while the earnings environment has not been amazing with most sectors seeing downgrades, large sectors have held up, which is the key for markets. The extent of downgrades has also been modest until now. He adds that while FY24 earnings will see downgrades, keeping the upside for the markets in check, they still do not foresee a large collapse. The earnings revisions will still be sufficient to keep the markets in check in the first half, with the Nifty at 16,000 as the downside support. At a sector level, financials present enough resilience to stay with.
Well, let's also get you some opinion on the macros. This is Indranil Sengupta of CLSA, who reiterates their call that the RBI MPC will raise rates by 25 basis points on the 6th of April after January inflation came in at 6.5%, breaching the RBI's 2 to 6% inflation range. They've argued that the RBI is raising to offset Fed rate hikes of 50 basis points by the 3rd of May. He further adds that the inflation imperative is broadly met with the RBI repo rate at 6.5%, well above the 5.8% we saw between 2019 and 24. Still, this would provide the RBI with a further reason to hike rates. On balance, they have raised the March 2024 inflation forecast by 30 basis points, 6.2%. For F524, CLSA forecasts inflation should slip to 5.5%, allowing a 100 basis point RBI rate cut in the second half of F524.
All right, and some more opinion coming through on the inflation data that came in yesterday. Citi's Samiran Chakraborty said the upside surprise in Jan CPI print, an expectation of 6.4 to 6.5% level for Feb, has increased their conviction of a 25 basis points rate hike in the April policy. Sticky core inflation and resilient growth momentum doesn't bode well for the RBI's aim of breaking the persistence of core inflation. He adds, it won't be surprising if the RBI continues its withdrawal of accommodation stance in April as it waits for the LTRO maturities in March and in April.
All right, some money market views now on the rupee. Bhaskar Panda of HDFC Bank says the dollar index remains stronger after last week's non-farm payrolls data. US yields are also tighter. Today's US CPI data will be watched with caution. Oil has remained range-bound and Asia ex-Japan currency seem to be stable. Given this backdrop, Bhaskar expects the dollar-INR pair to trade below the crucial 82.80 level, and for the day the range is between 82.55 to 82.75 to the dollar.
And on the bonds, Bhaskar Panda of HDFC Bank says CPI reading came in above RBI's band and above the median expectations. This might push yields a little higher as well. He expects the 10-year benchmark yield to slide towards 7.4 and to trade in a range of 7.35 to 7.4% for the day.
Well, there's a lot of stock-specific action, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Nykaa, SAIL, Ratnamani Metals, Linde India, Global Health, and IRB Infra. They are stocks on the back of positive news flow. On the flip side, you have Z, Campus Activewear, Castrol India, and GSPL. They are stocks that could react to a negative piece of news.